Okay. Yeah, so let me share the learnings from the Prostarm trades, and why we took it, why I half sold it here, and why I booked remaining here, right? So yeah, someone I think had asked this question in our Pulse community. Yeah, so the buying reason was pretty much clear, right? So this came from a winner database. The stock is up already 135% this year, right? So the first characteristics of a winner stock is it should have more than 50% move in the lockout rally. So this is an IPO, rally which started in the month of June, and then stocks start to form a base, right? So now we look at the characteristics of the base, right? So the depth of the base is oddly around 27-28%, which is pretty much fine. Like 26 is what I want to look, but 1 or 2% here and there is fine, right? So even though if you look, it's close to 26.77%. If I remove the area which is seen here, which looks like a little shakeout below 50-day moving average, right? So this is pretty much a decent base. Now what happened within the bases, right? So we want to see the characteristics of the base. So the left side of the base, so selling, as we know that left side of the base is generally led by high volatility, high selling. Then the bottoming start to appear here, right? And this is the time I think I posted it in our community that this will give an entry from the base bottom. So this is the reversal pivot which it formed here, right? So this is the reversal pivot. So if you're not seen the session on the reversal pivot, go and check. There is a recorded session in the Pulse course, right, which covers about the reversal pivots. So this is the first time it offered a reversal pivot and an entry here. So this was the time it gave the first entry above this pivot, right? So this is 196 around odd levels where it offered an entry, right? So this is a complete reversal pivot, 196.2, 196.5 around this level, right? So this is the first time this guy offered an entry. Now why did I half sell it here is the question, right? So if you look at the left side of the base, right, the left side of the base is generally selling driven, right? You will start to see a lot of selling volumes appearing here, a lot of fast sell move here, right? So now why stock form the base is, the reason for that is the institutions have stopped buying it here, right? Any stock can fall on its own weight if there is institutional stock, right? If they stop buying, it can fall on its own. For example, let's say people who bought in this particular area, right? Someone who is buying, let's say this breakout, right? So the stock stayed above this guy, like this price, for how many days? It stayed for almost 1 2 3 4 5 6 7 8 9 days, right? And how much it moved? 17%, right? So these are the people who bought it here. They got a chance to exit in the first 15-16% range. Now people who, let's say, entered here, right, around 230 odd levels, they hardly get a chance to exit, right? There was only one day when the price was above 230, right? The next day it was below 230, third day it was again below 230, right? So now the left side of the base, how it behaves and how many people are stuck here, defines the strength of the selling, right? So what does that mean? Whosoever has bought above this price around 230 odd levels, they never got a chance to exit that, right? Either they could have sold it, I mean they might have, we don't know, but in general, like if they had to make profit, the price had to move in this range again, right? So that they can react again. We don't know if they have already reacted or not, right? So this is the first time when the price is entering into this range, right? This is the first time when the price is entering into this range, right? So now these people will react because this is the first time the price is entering where they are stuck, right? So now you want to see the behavior, whether it's a constructive behavior or you start to see selling. So if I look at this particular day, the price made a high of 232 odd levels, but it could not sustain, right? And it fell. So that means these people are still reacting. This supply is not yet over. right? And in general, the core principle of VCP says that, you know, the first contraction, if it is, let's say, 27% deep in this case, the second contraction can be, you know, close to half of this, right? So that means in general also I can expect that if this area is getting hit, at least this drop will be 8 or 9% deep, right? If not, let's say 13% deep, right? So this is a general behavior which you will see. If there are active supply area on the left side, a stock will start to form another low cheat pivot here. This is what it did, right? So it started to contract again. It contracted for almost 5 days, right? And it was in a range of close to 6 7% odd, right? If I calculate even the high of this candle, it was in a range of around 8%, right? Which is pretty much clean, right? Until this particular day, there is nothing wrong with this guy, right? So now look at what happened here, right? So I want to see this price contracting decently. I don't want to see this price, you know, showing unnecessarily shakeouts. If this has the urgency, then there is no way that, you know, you'll start to see this type of a candle, right? So it should respect this particular 9-10% range. If there is something, a move like this, for me this complete structure which you see on the right side is already broken. Until and unless this supply is absorbed again, it start to form another breakout pivot, right, in this area, specifically you know, around 228 230 odd levels, and it try to stay positively above these levels and start to show you further urgency, then it's a trade for me. Otherwise this complete structure is broken for me. This shakeout which you see here, it's not a good shakeout, right? It's not a shakeout, but it's an expansion on the downside again. And even if you look at these two bars, right, first bar and the second bar, if someone was showing urgency here and he was showing a good demand that the prices were you know, moving up strongly as soon as they were coming back into the 205 206 odd range, but this time there is no pullback, right? So the people who were interestingly buying here, there was a price move of almost 9%. Now this bar is an ignite bar, right? So this bar also has lost its significance because of this. Whosoever has entered here, he doesn't seem to be interested buying it again when the price is coming back into his range. So we have to see for few more days. If it sets up decently well, it try to act well in the 230 odd range, then it's a good candidate. Otherwise this complete structure is broken for me. Yeah, so this is the reason, like, I sold it here and then I raised my stop to 217. Ideally, like, I had my stop there to around 204 odd levels, but I had to revise it because of this particular movement intraday. Like, it was down, I think, probably 5-6%. Then I revised my stop to the intraday low, like basically this day is low. I didn't want to see that it expands on the lower side further. So I think, yeah, this is on it. Okay, thank you guys. Yeah.